What's up, guys? In today's video, our head trader, Ice, as he's known in our Discord, is going to cover his entire strategy on how he was able to pull $20,000 from Apex in payout. This is a far overdue video. We have so many requests on this strategy from clients. So strap in because there is a ton of value in this video. If you're new here, my name is Mike Santucci. I'm the founder and CEO of QuantVue. We make TradingView, NinjaTrader, and Sierra chart tools. We have over 9,000 members in our Discord community. So be sure to like and subscribe because we post content like this twice a week, every Tuesday and Saturday. Without further ado, here is Ice breaking down his entire strategy.
All right, what's going on, guys? This is Michael Jones, better known as Iceberg from the QuantVue Discord, bringing you guys I don't want to say a long due video because it has been covered briefly before on our QuantVue social media channel, but this is me basically breaking down exactly what I like to look for when I am on the markets. Scalping, of course, ideally, but just taking advantages of what QuantVue shows and trying to get a few points, a few dollars in and out, and it doesn't really take any time at all. So just want to go over the few settings that we have real quick just for a point of reference here. As you can see on the screen for this illustration, we're in a box 2 here as shown on the mouse. QuantVue always recommends 2, 3, and 4 for the wrinkle box if you're on the NASDAQ, just because the price action is a little fast and you don't want to get overwhelmed on wrinkle box 1 because of how fast it. For all of the indicators, we have standard Q Pro indicator, SMC indicator. We have the freebies, which is Oracle Squeeze Relaxer and Ultimate Reversals. And this is something that I added recently, which is just an open source indicator from someone in the TradingView community called Consolidation Zones. Essentially, what this does is it helps you avoid what it would dictate as sideways price action. So I'm going to mute it just so if you're looking at the screen, you can see the difference here. When I unmute it, you're going to have this zone here, this zone here, this zone here, this zone here, and all the way on the end, this zone here as an example of, this may not be the best time to get in because it's not giving you what I like to call purposeful directional movement. QuantVue's indicators does a great job at showing that, but for individuals, and I would even include myself in this, that may enter too early or even too late, it just gives a additional bit of confidence for you when in the market. So for example, if you were to take this upcoming bear opportunity, you would have known to stay out of this zone because it's, like right here where it briefly turns red or Q cloud, turns back green, turns back red. This is what I just like to call indecisive price action. It's not really giving us anything until we go down to the downside and get about almost 13 points at its peak. But let's go ahead and get to the main purpose of the video. All right. So there's 4 different things that I'm looking for when I want to try to take advantage of the market. And I've said in the Q&A that we had a couple of days ago on Monday, I've said in the video that people have seen on the QuantVue YouTube channel, if you guys want to check it out, for anyone who's listening to my voice that hasn't seen it, I'm looking for 4 typically specific things that will help me be at peace with the trade if I take it and it goes against me. And what I mean by that is that I just want to make my risk as low as possible. And the way I do that is with several confluences. And we're going to go over those for you. So I'm going to go basically top down. So first order of confluence is going to be Q line, right? So price shows the lines going fully red or fully green as price goes in its favor if it's going up for green or down for red. So right about here, which is at about 18,442, it's about that point is where all of these lines go green, right? So, and the wrinkle is about here, and it's translucent, so it's difficult to see if you're looking, but this is where the wrinkle is, and obviously this is where a Q cloud is, right? So this is my first confluence. It's all fully stranded and looks like it's going to go on the upside. My second order of confluence is going to be Q line, right? So price, even when it was coming down here, is still above Q line. So for all intents and purposes, this looks like it's going to be a trending trade to the upside, right? So we're above Q line here. As you can see, for like a brief spoiler alert, the buy Q line symbol appears here. And the reason it appears is because it is detecting that we're going up. And Q line, when it goes up, it breaks upward. And as you'll see later on, when it goes to sell, it breaks downward. So those are my first and second order of confluence. My third, and what I would deem the most important, is Moneyball. Why do I feel like that's the most important? Because Moneyball gives us an indicator that allows us to avoid choppy price action. It's more directional, it's more purposeful. It's really what's in the name Moneyball, right? So at about if I go back here, let's see, 18442. If I take my mouse and come down, you see here where there's a flip on the money ball from light blue when it previously was dark. So that's my third order of confluence. These three so far is telling me that we're about to go up. And my last order of confluence is going to be Q momentum. So I would have to scroll back a little bit here. But if you see way back here, when we came out of this very bearish price action going down, you have your reverse bullish alert here, and you have the green dot here form, which lets us know that we're about to go on the upside. And we start to go on the upside. There's a hidden bullish here, a hidden bearish here, sorry, before we come down a little bit, but then begin to go back up. And right at about here is where Moneyball is flipped, and we're starting to form going to the upside. So if you see all of those confluences, that's 4 different confluences that's letting you know that this is probably going to be a good or great trade to take, right? So if you see all of those 4 things, if you're able to catch it at about 442.75, or let's say you do 443 or 444, right? You take that trade, and then from there you're going to go just about 13 points before you get one of Oracle's reversals, and it pulls back a little bit. But here's what would make me want to stay in a trade if I'm not trailing it too hard with a stop. Q Cloud is still fully formed. Moneyball is as flush as it can be. For all of my traders who likes the HMA overlay, this is at the very top of it as well. This gives you another viewpoint of what price is doing, and our momentum is literally at our peak. So if you're not afraid of this brief candle pulling back, we stay in this trade, right? And we go up a little bit more. We go up a little bit more. We hit another Oracle reversal and a diamond squeeze relaxer. They're on top of each other, so it's difficult to see them both, but they're right there. Pull back just a little bit. Again, we have pulled back with this red wrinkle here, but again, let's have faith in the indicators, right? Q Cloud is still fully formed. Moneyball is still fully flush. Now we do have one thing that's giving us a conflict, right? And that's momentum. So this is essentially making us 3 out of 4 indicators in our favor of saying we're going to the upside. So at this point, you may want to consider either tightening your stop, or if you just want to secure your profits up until this point, you exit, right? What I would consider personally, I've seen in trades that Q Cloud kind of gives us the game of when it really goes down as opposed to Moneyball. I'm not Moneyball, momentum in real time. So again, if my stop isn't too tight for this pullback, I'm staying in this just a little bit more. And then once we get about here, you see the red wrinkle here. There's another red wrinkle here, but it's difficult to see because Q Cloud is still fully green. But most importantly is that we're starting to get the threads, the strings of Q Cloud. They're now different. Some is green here, some is red. Now, Moneyball is still fully flush, but as you can see in the still image, at a certain point, we begin to go downward. And more specifically with Q momentum, we've already went down. So, and then of course, your last confluence about getting out of this trade, if you're going completely by Q line, you can see the wrinkles begin to touch and exceed this line, which means that at this point, this trend may be over and you want to go ahead and get your profits here. So, this is a 18,444. So if you peaked at here, 18,477, you're looking at roughly a 30-point trade, which is fantastic. 30 times 20, NASDAQ is 4 ticks on a point, 5 ticks, $5 per tick, $20 on a point. So that's roughly about $600 on one contract, which is awesome. And then you can do the math if you choose to trade 2, 3, 4, 5, however many mini contracts, or if you're a micros person, whatever that math would look like. But the point is, one contract with this is great. This is a great push up. And when I explain to people that, I can, I can only speak for myself, but I think QuantVue just shows things so clearly. You can do this up and down the chart, and you're not afraid of what price or how many points up or down the market is looking because of the opportunity that it shows. We have another nice one here. So same rules apply, right? So Q Cloud is fully formed here, but we do have this consolidation as I've stated, so I wouldn't consider this yet until we break out of this. Probably to be super safe. Again, I'm waiting until we get under this line. We're under the line here at about 18,475. So once we're under the line, I'm going to go down and I'm going to check my other two confluences. Moneyball has flipped here, flipped way back here, but we're in alignment here. And momentum is way back here, right? But it did slowly come down until we got about here where everything is in unison. So I consider this trade again. And this is 18,475 before we peak at 18,467. That's an 8-point trade before it pulls back. Let's say you allow that pullback to happen because you like myself, I think that it may go further. You may get 5 points, right? Or 4, which is still great money. If you, again, stick with Q line as your basis of getting out of the trade, then you have the stomach or the steel to withstand this pullback, right? Q Cloud is starting to form here. So we have in between, but a couple things, right? We haven't crossed Q line back upward, and Moneyball looks even more fleshed out than it did when we took the trade, right? So again, if you have the stomach to stand this brief push up, it pushes all the way back down again, right? And so we're looking at a point where we were at 18,476 to start, to now getting all the way down to 18,449, which is an awesome trade. And then at this point, Q Cloud starts to form again. More importantly, it pushes above Q line, which lets you know it's time to go ahead and get out, right? That trend of going down is over. You see the same thing over and over again. It's really a simple, brilliant, but simple strategy that Tucci showed long ago in one of the YouTube videos he's posted or social media. Here's another great example here, another bearish example. So we're going to wait till it crosses under Q line, at 18,447, right? Q Cloud is already fully formed when it does that. So same thing again. We want to come down to Moneyball. Moneyball is starting to push below this red line, which forms this diamond. You go down further here, the momentum, and the zone or the dot is formed way back here, but this is where we're about here is where we're unified. So you would take this trade at 18,447, and you're going to take a great ride down to 18,408. This allows you to shut the computer down for the day, right? That's another about 30-ish point trade. And again, you can take these up and down the chart, right? And just for purposes for the bullish one, here's one more here. So we're using Q line as one of our confluences. We wait till we get above Q line. It's above Q line here. Q Cloud is fully formed. As you can see, all 6 lines are stranded or fully fleshed out. So we take a look at Moneyball. Moneyball is flipped from where bearish here to bullish, Q momentum, dot here, and we're in unison at about here. So we take this trade at 18,442, and we would have pushed all the way up to 468 before there's some brief pullbacks. And again, it's going to be up to you if you're going to get out or stay through it. But you have Q Cloud still fully fleshed out here. Moneyball is still full here. And we haven't hit the red dot yet for momentum. So all the reason is on your side to stay in this despite what price is doing. So that's essentially the strategy, guys. It's just, like I said in one of our in one of the videos that I've had or discussed with the community, you will begin to see the similar traits over and over and over again, and then it will become second nature. Your job at that point, once you're able to understand and hone in on the strategy, is that you just want to make sure your entry. I don't want to say that well, we all desire to be as precise as we can, right? But sometimes price is going to be going fast. Sometimes it's going to pop on you where it goes from 1 point to 7 points in an instant. Market is going to do what the market does. But for the most part, if you stay in the market when it's giving you normal standard price action, you will see these opportunities up and down the chart. And then it's up to you to just make sure that you get your entry in on time. You have your risk respectable. So if the trade goes against you for whatever reason, it doesn't shake your foundation. It doesn't shake your core. It doesn't shake your confidence, because you know that just looking at the chart, if you're seeing the same four things over and over again, you will win more than you lose. And more specifically, if your losses are fixed, and what I mean by that is that if you have a stop loss where every time you lose, you're taking the same amount financially of losses every time, versus your winners, where I just described, you're getting 8 points or 12 points, 15 points, 20 points, 30 points. Your P&L will be green. It just will be green. It's just the math, right? I hope you guys enjoy the examples that I was able to give on the NASDAQ of this video. I definitely expect more videos from myself, as well as everyone in the QuantVue community that makes them across YouTube, as well as social media page, Facebook, Instagram, as well as every other channel. And greatly appreciate you guys listening to the sound of my voice. I hope you all had a great trading day. There was a lot of opportunities in the market. As I've always said, take bull and bear alerts. And you guys take care. I'll see you soon.
Now, if you want the exact toolkit that ICE showcased in this video, first link in the description, you could try all of the tools, course content. You'll get full access as if you were a paying subscriber for 7 days. Free for 7 days. Start your free trial, first link in the description. Like and subscribe if you haven't already. We'll see you in the next one.